Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. China's property crisis went from bad to worse this week as the crisis spread far beyond Evergrande. China recorded the worst drop in real estate prices since 2015, and home sales by value declined for the fifth month in a row, a 16% decline in November. We also saw a major slowdown in the growth of retail sales throughout the Chinese economy. So what I want to do today is briefly check in with Evergrande
Jesus. Sorry, we tried.
And see how the developer has fared since we last looked at its official default, which occurred last week. Then I want to talk about Shimao, one of China's more healthy real estate developers, which had some real problems this week, potentially signaling an even worse problem than Evergrande. Then I want to go over some newly emerging debt problems that are happening with China's local governments. We'll then end off with China's 2022 plans to limit the fallout from Evergrande, the real estate developers' problems, the local government problems, and the overall debt crisis occurring in China.
Everything is beautiful. There's nothing to worry about.
We are going to have our year in review on Canada's real estate market coming out on Sunday, so make sure you click like and subscribe if you want to get those updates. But for now, let's get into Evergrande. So as mentioned, Evergrande defaulted on its debt last week.
Fresh start. No debts, no baggage.
No, not quite. Chinese authorities moved very quickly this week to help limit the fallout from Evergrande's default. Chinese authorities started by having Evergrande's founder, Kai Yan, sell 277 million shares of Evergrande, and all reports seem to list that they're going to be forcing him to sell even more assets, as the Chinese authorities have started an audit of the founder and of Evergrande to find out where the assets and where the liabilities lie. So we talked about last week how they had set up a restructuring committee, and they're moving very quickly this week, forcing the founder to liquidate assets, and they're really taking a close look at Evergrande's books. Well, we have received a lot of information over the past few months on Evergrande and its debt and its defaults and the amount of money that it owes. I do expect that with China taking charge and with Beijing having its hands firmly around the Evergrande crisis, that the amount of information we're going to receive in the next weeks, months, and even years ahead is going to be less and less. With Beijing calling the shots, it's highly likely that they will impose strict consequences for any leaks coming out of Evergrande employees or coming from the founder or anybody connected to it.
You keep your mouth shut.
So I do expect that the information is going to be somewhat limited coming out again over the next months and years ahead, but we'll obviously have updates on this channel as much as we can on this contagion that's really continuing to spread, which we're going to get to right now. We spoke last week about Kaisa defaulting as well, which is the developer that had the second most amount of offshore dollar bonds on its books, and due to the defaults of Evergrande and Kaisa, investors, analysts, authorities are starting to take a closer and closer look at Chinese real estate developers, even those that were considered at one point in time to be safe. A new real estate developer that we haven't talked about yet, Shimao, came onto the scene in a big way this week after there was a major sell-off of its bonds on Monday. News later broke that the company had been moving money around between their developer side and their property services side, which caused a big stir in the market. For its part, JP Morgan said that the moving around of money not only raises liquidity concerns that Shimao might not be able to make its payments on its debts, $390 million due in January, but also raised major corporate governance concerns. The biggest problem with Shimao, and why I say that it might be even bigger than Evergrande, the problems associated with it, is that Shimao was at one point considered safe. While Kaisa and Evergrande having defaulted last week and been the main source of attention over the past few months, many already knew that they were basically going under. They knew that those assets were risky. Those investments were risky in those companies. But Shimao was considered one of the good companies, one of the investment grade companies. So when even the good ones start to fall, when even the good ones have liquidity issues, that's definitely going to help calm an already jittered real estate market in China.
And the concern really is that a firm like Shimao, which still carries one investment grade rating, which earlier in this year passed all three red lines, that a firm like Shimao could now be facing issues and potential concerns about its repayment obligations. That could, of course, indicate much broader concerns across the sector, and it could in fact be a little bit more destabilizing than the crises that we saw at Evergrande and Kaisa, simply because those were so long awaited.
As the population continues to get more and more worried about investing in real estate in China, about buying pre-construction sales, these new home builds, When they start to see even good developers go down, they're going to hold on to their money, which is going to cause even more problems on an already burdened real estate sector, which we're about to get into. It was reported this week by The Economist that one of the biggest new worries, besides Shimao, in China's real estate sector is the local government finance vehicles, LGFVs. These local government finance vehicles are ways for local governments to take out loans, to issue debt, and keep it off the books. If you remember, in September, Goldman Sachs came out and uncovered over $8 trillion in debts that was held off the book by Chinese local governments. These LGFVs aren't a problem in and of themselves, so long as the governments are able to make the payments. But Chinese local governments receive a large portion of their funding from the purchase of land leases, from the sale of land. And as this real estate market has continued to tank, the governments aren't getting this large influx of income, and there may very well be a very difficult time in paying off those debts or making the interest payments on those debts.
The transmission channel I'd be most concerned about is through local governments, because we've seen land sales decline by about 45% over the last 2 months, based on the 100 city data. That's going to put a lot of pressure on local government finances and on their ability to service local government financing vehicle debt.
So yeah, company defaults, even on a grand scale, is one thing, but when the government doesn't pay its debts, that can cause a whole new type of crisis, and $8 trillion is definitely much bigger than $300 billion that we saw with Evergrande.
The channel of contagion I think Beijing would be most concerned about, that everyone would be concerned about, is the potential for LGFV debt starting to default in larger numbers.
So this crisis that started with Evergrande, which started with them not being able to meet their obligations, led to a slowdown in the property sector, which is slowing down the amount of money that gets paid to these local governments, which hampers their ability to pay their debts. So we can see this spread, although Chinese authorities are trying to ring fence it as best they can. This spread started with Evergrande and has moved all the way to the government, which is definitely a story which I think is going to be a big deal in 2022. China, for its part, also worried about these LGFVs and about the real estate sector and about the overall economy, is going to be adding significant fiscal stimulus, significant support for the Chinese economy in 2022. Analysts are saying that right now it's likely they will support the Chinese economy via fiscal stimulus, so they're going to be planning another cut to the bank's reserve ratio, the amount of capital that banks have to keep on hand, compared to how much that they can lend out, which does weaken the banks somewhat, while simultaneously getting money into the system. And they also do plan on having some fiscal stimulus, meaning construction projects, which has been badly hurt, the construction industry, by the real estate crisis.
To start with more conventional monetary and fiscal tools, such as further RRR cuts and accelerated infrastructure spending, we're likely to see more fiscal spending right in the beginning part of the year.
So right now, China really has the opposite problem that we're having in the West. It was announced just this week that Jerome Powell, head of the Federal Reserve, will be raising rates at least 3 times in 2022, and the Federal Reserve will be ending its quantitative easing program. So in the West, because of our ultra-high inflation, we're really trying to limit the money supply. We're trying to limit the amount of money that's out there for people to spend. This is thought to be the only way to fight inflation, to keep that inflation rate down. In China, they don't have enough money out there. Because these real estate developers have defaulted on their debts, because these local governments look like they might default on their debts, nobody really wants to invest in China. And if you did want to invest, you're going to want a lot of money for that risk premium that you're taking on. So, whereas in the West, we have too much money, we need to constrict that supply. In China, they don't have enough money, they need to get more money out there. These two divergent problems, I think, are really going to characterize not only China's and the US and Canada's relationship in 2022, but the ability of the US and China and the Federal Reserve and the People's Bank of China to adequately manage this crisis is really going to have a major effect on, I think, the global economy throughout 2022. And obviously, we are going to keep a close eye on it with our weekly China updates. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.